tuned into Market Fatafat, a show where we discuss all the stocks that are buzzing in trade. But in particular, let's put the spotlight on tire industry then, especially after the GST cut announcement that came in the day before yesterday. And to discuss what the outlook is for India's tire industry, we are now joined by Raghupati Singhania, Chairman and Managing Director at JK Tire and Industries. Mr. Singhania, afternoon, and thank you so much for taking your time out and joining us here on ET Now. First up, if you can tell us, how big a push is this for India's tire sector, and what kind of demand recovery then do you expect for India's OEM industry?
Good afternoon. Thank you very much for having me on this show. It is overall GST reduction is very timely and, according to me, a big boost to the consumption-led economy of the country. Talking specifically about tires, it should give a little bit more boost to the demand, no doubt. So will it give a boost to the demand of vehicles, both trucks, particularly trucks. And in trucking, it is very critical to understand that it is a lifeline of the India's economy. The entire last mile connectivity, your entire e-commerce is dependent on trucking. The basic sectors like cement, steel, and food grains are moved by trucking. After all, 60 to 70% of the goods are moved by trucking. So therefore, it is going to create a big boost in the total economic activity of the country, to my mind, and help the consumerism better.
Hi, Mr. Singhania. This is Kanishka also joining in. Since we are speaking of segments, now replacement is nearly 2/3 of your revenue, right? So how strong is the current replacement demand, and do you expect double-digit growth going forward post the GST reforms that have come in?
No, I don't think we can see a double-digit growth. The replacement demand is likely to go up well in terms of our 6 to 7%. And it is not going to, it can increase by a couple of percentage points, but not really boost up to double digit. Because look, basically it is lowering some price, but products like cars and so on are not necessarily price elastic, and nor is the tire. It is a need-based item. And so therefore, a person who wants to buy one car will not buy two or one and a half, kind of. So therefore, it will give some encouragement to demand boost, but not a huge double-digit growth of the kind, to my mind.
Okay, so Mr. Singhania, you are saying that perhaps we could see replacement demand rise by as much as 6 to 7%, but also wanted your thoughts on demand from auto sales in particular. What is the traction here, especially in premium car and SUV segment, where margins for tire industry from these segments are on the higher side?
You see, there are two things, as you rightly put it. The premium size cars are likely to suffer a little bit because of the duty structure being skewed against them. Of course, the small car should pick up. But as far as we are concerned as a tire industry, we are selling more tires to premium cars. But please don't forget that OE is one portion of the game. The rest of it is in the replacement market. So in the replacement market, the premium cars which are operating already are using our tires and will continue to use our tires irrespective of new buys or not buys. So that should not impact our demand in the replacement market too much.
It's about demand, but let's also talk about prices when it comes to the premium segment. Now, with these GST benefits largely expected to be passed on, Mr. Singhania, do you see any scope for a price hike in your premium offerings?
Well, that remains to be seen, but as far as the other part is concerned, passed on, 100% indeed. Look, what is GST? If I were charging 100 rupees for my tire and then loading it with 28% GST, and tomorrow, what I will do is at the 100 rupee tire, I load it by 18%. So as far as the price is concerned, I'm not cutting any prices, but the consumer is certainly paying a little lesser price. So that is one. And therefore, the demand for our premium tires to that extent should help, should improve, because the price differential between the other ones will narrow down. But it does not necessarily translates into increased volume of cars being sold in the premium category.
So that's as far as the premium segment of the market is concerned. But Mr. Singhania also wanted your thoughts on the kind of moves that we are seeing as far as raw material prices are concerned, especially crude-linked inputs. Is that still a concern for the industry? And do you expect raw material prices to then stabilize by the second half of this fiscal?
Incidentally, at the moment, prices are fairly stabilized. If the oil prices move upward or downward, then we will get a benefit, of course, or otherwise. And so are the natural rubber prices fairly stable at the moment. So we don't have too much of concern on the raw material front at the moment.
Right, so that's about raw material prices. Thank you so much, Mr. Singhania, for joining us today and helping us understand how the tire industry is viewing the GST 2.0 reforms. We'll let you go on that now. All right, before we get discussing all the buzzers, then let's take a quick look at how the market is faring at this point. It continues. Oh, it's actually turned to green. It's flat, but on the green side, it's above that 24,750 level. In fact, the Sensex that has also made a comeback and is trading just about flat, about 0.03% higher at that 80,739 level. So a positive
one. Rajesh, afternoon, and thanks so much for joining us today. We also have Rabinder from our research desk. NMDC, that's the first stock that you've picked for us. Where do you see the stock headed, Rajesh, from the current level?
So if we see the charts of NMDC, last 2-3 months it was doing nothing. It was in a consolidation phase, but finally this week we are seeing some positive traction. In fact, we are seeing a symmetrical triangle pattern, and prices are now sustaining well above all the key moving averages. So in the near term, we expect the stock prices to extend higher towards the 80 levels, which is the pattern target. And on the downside, if we see a dip is getting bought into, and the breakout level somewhere around 72 is likely to act as a support in case of any dip if we see in the coming week.
That's the view coming in on NMDC, but let's also put the spotlight on cement sector, especially after the GST cut from 28% to 18%. The entire sector was buzzing yesterday, continues to remain in focus today as well. In fact, we have a whole host of brokerage reports that have come in this morning. First up, Nuvama, where they say that prices continue to take a breather, but GST rate cut will be a big positive not only for the cement sector, but for the real estate and other ancillary sectors as well. Demand was subdued in the month of August. Nuvama says that prices have largely remained steady across regions, but they also add that several price hikes have been attempted in the month of September so far, especially ahead of that 22nd September deadline, where prices are expected to come down on account of GST cut. They say while the GST cut might retain some amount of price hikes, they believe it can also boost prices, and the premiumization trend is likely to accelerate going forward, and consumers are more likely to prefer category A and premium products on account of this GST price cut. So the entire sector in focus for the second consecutive day on the back of this.
That's right. So cement sector in focus on the back of the GST news flow. But moving on, now let's also put the spotlight on Aarti Drugs. Now, this facility has commenced its commercial production at its new manufacturing facility in Gujarat yesterday. Now, this 220 crore plant, financed through term loans and internal accruals, has proposed capacity of 60 metric tons per day. Initially, this plant will operate at a 1/3 capacity. Now, this facility is particularly aimed at reducing external raw material dependence, enhance supply chain reliability, and also drive margin expansion for the company. It will primarily cater to the domestic market with potential for future exports as well.
Okay, so Aarti Drugs in focus on the back of their expansion plans, but Rabinder, Power Grid is also in focus, and this is on the back of an order win, I believe.
Well, as Power Grid is in focus, the company has declared a successful bidder under a tariff-based competitive bidding to establish interstate transmission system for the project, namely transmission system for evacuation of power from the pump storage project in Sonbhadra, Uttar Pradesh, on build, own, operate and transfer basis. And the letter of intent has been received by the Power Grid for yesterday, and the project comprises establishment of a new 765 and 400 kV pooling substation and base extension work at other upcoming substation, and 765 kV transmission lines work in the state of Uttar Pradesh. So back of this news flow, Power Grid Corporation of India is in focus, and the stock is up more than 1%.
Alright, so Power Grid up more than 1% as we speak. But moving on, Rajesh, you've picked out Indus Towers for us. It's soaring in trade today. It's up more than 5% as we speak. Past few sessions have been very positive for Indus Towers. Do you expect this upside momentum to continue?
from the July month, the stock has seen sharp sell-off from the levels of 430 levels. But even after that, the prices were holding on to its multi-month swing lows around 310 levels. And now today we are seeing strong positive traction. The stock is in positive divergence in RSI, and on the weekly chart we are seeing a hammer kind of formation. So in the near term we expect the bounce back to extend. Possibly the bearish gap left around 350 levels can be retested, and on the downside possibly 320 330 is likely to act as a support if in case there is a dip.
Okay, so that's the word coming in on Indus Tower, 340. That's where the stock is currently trading. But let's also put the spotlight on Inox Wind. And this stock is also in focus on the back of a brokerage report. Nuvama, in fact, continues to maintain a buy stance in the stock with the target price of 190 rupees per share. The stock currently trades at about 146 odd levels. Nuvama says that the group has undergone meaningful restructuring with the kind of announcements that they've made. Merger between several group companies, rights issue which is aimed at balancing the balance sheet deleveraging, and calibrated capacity expansion as far as their wind segment is concerned. They foresee revenue visibility till FY27 backed by its 3.1 gigawatt power plant, and they also said that Inox Green has forayed into solar O&M. While RSIL reinforces its manufacturing and EPC capabilities. So they've come out with the report. They are maintaining their buy stance. 190 is the target price, and Inox Wind in focus on the back of that, and it has recovered from the lowest point of the day, much in line with what the markets have done, 1.3% higher for the stock.
That's right. So that's Inox win for you. But moving on to the next counter, Rajesh, you've picked out Divi's Labs for us. The stock is down about 1.5% and is trading near the day's low level today. In the past 3 months, odd months, it hasn't done much. But do you expect a turnaround from here on?
So yes, it's the weak counter. In fact, we are expecting further weakness in the near term. If we see on the daily chart, a flag and pennant pattern breakdown is visible. Also, if we see it's struggling to hold 200 DMA. On the RSI front, if we see recently we had a bounce, but RSI is struggling to cross 50 levels. So we expect the Divi's Lab to slip further. Possibly its a recent swing low somewhere around 57.50 can be retested, and in case of any bounce back, 62.50 is likely to act as a stiff resistance.
Okay, so that's the word coming in on Divi's Laboratories. But PNC Infra, Ravinder, why is this stock in focus today?
Well, as PNC Infra is in focus on the back of their order win, where company has emerged as the lowest L1 bidder in the tender floated by the Bihar State Road Development Corporations for construction of high levels bridge and approach road in Bihar for the quoted price of 495 crore. So back of this order win, PNC Infra is in focus, and the stock is up more than 1.5%.
Alright, so PNC Infra up more than 1.5% as we speak. But that's all the time that we have today to discuss all the buzzers in trade today. Thank you, Rajesh and Ravinder, for joining us. On that note, we'll let you go.